instead we got 52, a strong bear bar closing on its low. So to me, the market looks like it's breaking out to the downside, and it's even clearer on 53. 53 has a 3-tick tail on the bottom, so I think you can still short the close, but you have to be suspicious that it might be the final short. Also, we're getting down toward measured move targets and a trend channel line. 54, a smaller bear body, so losing momentum, and a bigger tail at the bottom. So I think it's risky shorting closes down here. And then 55, I thought could be the low of the day. I don't know if when I talk about this, it's all that clear, but this is a spike in parabolic, a spike in climax type of spike in channel. It doesn't matter if you call just bar 26 the spike, or if you call the entire move down from 19 down to 27. It doesn't matter. But whenever you get 3 pushes down like this and the market turns parabolic, you usually get a pretty good reversal up. 55 was a good-looking bull bar. This was the second dumb thing that I did today. I was long at I think 68 or 68 and a quarter on the measured move down. I got long on bar 54. I think bar 54, maybe bar 55, one of those two. And I was going to use like a 4-point stop and add on if it went lower, because I thought the tails meant that traders are starting to buy. And then after such a big sell climax and the bar is shrinking, the body's shrinking, I thought we'd go up. I bought, I just ended up scalping out. And had I not scalped out, I probably would have bought above 55 based upon what I said, the spike in climax, 3 pushes down, a parabolic move. You know, usually you get a sharp rally from this. Okay. 56 was a failed low one. I don't think anybody on the planet would have shorted that. After the 3 pushes down, the trend channel line, the measured move, and the strong reversal on 55. So that's, I think, a good bear trap. When this pattern happens, and I thought it looked like it was happening today, you get the parabolic move down, and then you get a bear flag up, and it just never goes anywhere. The bears can't break it out, and at some point traders realize that the market is turning up and that the bear flag is not a bear flag, it's the start of a bull, and the market breaks out to the upside. I really wanted 59 to trigger a low 2 short. I think it then would have been, I would have been much more confident about the trapped bears and the move up. It didn't trigger. 61 tried to trigger the wedge bear flag. It didn't trigger. So that made me trust the 62 inside bar less. The market tried to form a low 4 or possibly a wedge bear flag at 64 and a bear inside bar. There's no way I'm going to short this. We're in a bull channel, and in a bull channel, I'm only looking to buy at the bottom of bars. I would consider shorting at the top of bars. In this particular case, I would only buy because I think the odds are that we're starting to get a parabolic move up, and at some point traders will realize that this is not a bear flag, and then the market will break to the upside. It tried to do that on 65, but bad follow through on 66 and 67. It turned out to be a little breakout pullback down to 69, and then a better breakout up to 70, 71, decent follow through. We're in the area of the measured move from the measuring gap above the 61 breakout point and the 69 pullback. If this were earlier in the day, I would have shorted at 77 on a limit order, and I would have added on at 78 and probably on 79 as well, as I said. This late in the day, I don't like to do scale in trades, so I just let it go. 2 legs down to 77, so it's a high 2 long at the moving average. The market broke back into the little bull channel, poked through the bottom, and might be turning up. But whenever the market is sideways into 1 o'clock, I'm not going to take a trade, especially if it's sideways with lots of tails and little reversals. So I didn't do anything into the close. Okay, now, this is a bull channel. A bull channel is a bear flag. So, I'm looking at this going into tomorrow as a bear flag and a pretty good spike down. So I could see the market testing yesterday's low. on the daily chart. Today is actually a very large range day. If it had a much smaller range, I could see this as a good candidate for a top for the reversal down from this bull channel on the daily chart. As you know, I believe that sometime in the next week or so, we're going to start turning down to the 1130 area, maybe 1120, maybe all the way down to 1110. I don't know. Maybe Prechter is right. Maybe we'll trade down to 100 over the next 12 months. But you know my thoughts about that. I don't believe anything he says. So, good night, everybody.